Kitco News, special coverage of the Vancouver Resource Investment Conference, is brought to you by First Mining Gold.
Energy independence is now as important as ever following the war in Ukraine that has brought the role of energy to the front of headlines all around the world. Joining me now is an expert on energy and the precious metals. He is the helm of two companies that are responsible for both uranium and gold. Amir Adnani is the CEO of UEC Uranium Energy Corp and the chairman of GoldMining. Welcome back to Kitco.
Thank you, David. Thanks for having me.
Always good to see you either virtually
My pleasure.
and or in person.
Thank
We
you.
are at the RIC right now, one of the largest resource investment conferences in the world. And we're going to be focusing, you and I today, on energy and then how investors can benefit from the current macroeconomic environment. So let's start by talking about Eastern Europe first and foremost.
Yeah.
Russia has been holding Western Europe hostage on a number of fronts, especially on the energy front. They've been withholding natural gas exports to Eastern Europe. And now there's talk of the EU banning imports of Russian oil. Previously, Germany opposed this because they were heavily reliant on oil, but now they changed their mind. And so this ban is looking a little more likely than a few months ago. What's your take on all this? What does this mean for uranium and nuclear power?
I think you could argue that the energy market will never look the same again. And this act of violence, this act of war that Russia has embarked on with the invasion of Ukraine, not only has near-term supply chain issues that is causing, obviously, with the shortages that we're seeing of hydrocarbons, as you mentioned, and uranium. But and so there's this immediate management needed of how does the West deal with energy resources that it doesn't have.
Yeah.
But in the long term, we cannot be a hostage to Russia. This idea of weaponizing Russian energy resources to drive acts of violence and war is simply unacceptable. And that, I believe, is where we are in the world, especially in the Western world. There arguably could be a bifurcation of the energy markets moving forward, sort of an East and a West concept. The sanctions, the actions being taken right now to try to curtail Russia's hostilities are not only near term, again, I believe will have long-lasting effects.
Right.
And we see that very, very clearly in uranium, and we're seeing it in nuclear power. In nuclear power and uranium, Russia has built a very dominant presence. They prioritized the idea that nuclear energy was strategic and frankly got ahead of many Western countries. And now we're completely dependent on Russian uranium and enriched uranium for the fuel to generate emission-free electricity, which is nuclear power.
That's it. So just to be clear, we're talking about Russian banning of Russian oil, not the electricity generation component. So nuclear power is used to generate electricity. Oil is used for a lot of different applications. Are there overlaps, though? Can nuclear replace some of the utility of petroleum, natural gas, and oil?
In the United Kingdom, Prime Minister Boris Johnson is now talking about building one new reactor a year, every year moving forward. The last time we had oil embargoes in previous times in histories from the Persian Gulf or other parts of the world, similar to what's happening in Russia right now, where supply disruptions occur, countries like France move towards nuclear power to meet their energy needs that way and reduce dependency on hydrocarbon. So there is an energy management issue moving forward to deal with, which is how do you reduce dependency on hydrocarbons that are coming from areas of geopolitical uncertainty and hostility.
Yeah.
But we still have an issue on uranium as well. Uranium is the fuel for nuclear power plants.
Yes.
Nuclear power plants generate electricity. And electricity, especially emission-free electricity, is what's driving electric vehicles, it's driving society today. And so it's arguably the most important and fastest growing form of energy is electricity. And so today, when you think about, just take the US, for example, the US is producing zero uranium. Domestically, no uranium mines are operating. Mm-hmm. And the biggest source of enriched uranium coming into the US is from Russia. So bad that it's almost impossible today to put an immediate ban on the import of Russian uranium into the U.S., even though politicians are calling for it.
Yes.
Politicians are calling for this right now, saying
so this
we
war
have to ban this.
Hasn't impacted the supply of Russian uranium.
uranium supplies from Russia are still entering the U.S. right now. There is a proposed bill in the U.S. Senate and the House that has sponsorship from both sides of the aisle. It's bipartisan, that's proposing to ban the imports of Russian uranium and nuclear fuel coming into the U.S. Some European countries and utilities like Vattenfall in Sweden have voluntarily seized and canceled all deliveries of Russian uranium and nuclear fuel to their country. And there's talk of that in other parts of Europe. Nuclear power is obviously a global source of power generation. But there's no doubt about it that no one wants to be held a hostage by Russia when it comes to energy resources. Unfortunately, on uranium, this is still a real national security and energy security issue, especially in the biggest market in the world, which is the US. This is the largest consumer of uranium and still very heavily dependent on Russia and countries that are under the influence of Russia, like Kazakhstan, like Uzbekistan.
I'm surprised Russia hasn't stopped exports of uranium simply to, stick it to NATO even further.
Well, you raise a very interesting question, and there has been rumblings of that. There have been rumblings in Russia, and certain Russian politicians have talked about retaliatory sanctions.
Yes.
Exactly what you're talking about. And so, look, that's why the situation is seriously high risk and also immoral. I mean, if you're a buyer of uranium on the U.S., you're funding Putin's war in Ukraine by purchasing uranium. This doesn't need to be a government ban to do the right thing and to be on the right side of history. You could voluntarily say, I elect not to buy uranium because by buying uranium from Russia, I'm financing the war in Ukraine. That could be a voluntary decision. Not everything needs to be forced on us.
Okay.
And, in a world of ESG, I really wonder if you're a utility, if you're a public utility in the US, why wouldn't you make the right ESG decision?
Indirectly, everybody... It's also, you're talking about being indirectly involved in financing the war in Ukraine, right? Everybody let's say you're in an American town that has a nuclear power plant nearby that provides electricity for you. Where does that energy come from? It comes from Russia.
That's it. That's
Most people are probably unaware of that.
1 in every 5 homes in America is powered with nuclear energy right now. 1 in every 5 homes. And the majority of the uranium needed is coming from Russia. Are individuals aware of that? That's a great question. And I would bet not exactly. And I think if there was broader awareness, that's why I'm glad we're having this conversation about this dependency. I think people would say, no, I'm going to vote with my wallet. I don't want to see the uranium be sourced from Russia, and I don't want to be directly financing that war in Ukraine.
Well, Amir, what other options do we have outside of Russia? Where else can we get our uranium from?
Look, demand for uranium is inelastic. That is the key point here to discuss. Okay. And so, first of all, an end user of uranium, being a nuclear power plant, it should not be and is not price sensitive to how much they pay for a pound of uranium. No one likes to pay more for something if they don't need to. But in this particular case, fuel cost makes up less than 5% of the overall cost to run a nuclear power plant. Meaning, if we look at the United States, if we look at Canada, we look at safe jurisdictions where there's greater political alignment, at a higher uranium price, the incentive price over $65, $70 per pound, there are incredible mineral endowments in the West, in the United States in particular, where my company is based, that could be developed and can become reliable sources of uranium in our own backyard and just eliminate this Russian dependency once and for all.
Where are your operating jurisdictions?
So as you know, with Uranium Energy Corp, we're primarily focused in Texas and Wyoming, both very business-friendly, very energy-friendly states with a very long-standing history of uranium mining, known uranium geology, and significant past production of uranium. And so these are areas where our company right now is growing rapidly, hiring drilling contractors, hiring folks to come back and work at these mines. That one day, in the past, these used to be the largest uranium mines in the world.
Yes.
And that leadership position was lost to Russia over the period really post-Cold War, where this leadership position in nuclear energy and nuclear fuel was ceded to Russia and now very badly needs to be regained.
I want to come back to the spot
Okay.
price because there's been interesting movements in the spot prices. We'll
Yeah,
see in the
I
chart.
noticed you were looking at the chart.
I'm getting to that. But just in general, the energy providers, the nuclear power plants, do they buy uranium on the spot market, or do they have forward contracts, right? So it doesn't matter if the spot market moves; their fixed costs remain fixed.
Utilities buy uranium under either long-term contracts or spot deliveries.
Okay.
Now, the price that's quoted in spot market, that chart you're looking at, does matter because that is a reference point to refer to if you're contracting and if you're taking deliveries under long-term contract. But if you were a utility, you'd rather buy under long-term contracts all day long because it's predictable. And you would rather have fixed pricing and you would rather just be locked in. If you're a miner, though, if you're in my shoes, you're better off not being locked in at a fixed price.
Okay.
It's better to have that exposure to the upside, especially if we believe, as we do, that this is a market that has been in a structural supply deficit for over a decade.
Right.
Supply has diminished and has just been declining over the last decade. Meanwhile, demand has been increasing over the last decade. More reactors have come online in the last decade, over 60, versus no new uranium mines have been built over the last decade. In fact, production was curtailed. The supply-demand picture calls for a higher uranium price. That is without the Russian issue that we just talked about. Outside of the Russian issue that we talked about, you're talking about a global market with over 440 reactors operating around the world in over 30 countries that need uranium year in and year out.
Yeah. So UEC sells at spot.
UEC is a 100% unhedged producer, and that's a rarity because most uranium companies have committed to long-term contracts with fixed pricing. We are very much a 100% unhedged, market-driven company. And look, we're putting our money where our mouth is. Late last year, as you and I were talking about before the interview, we made the biggest M&A transaction in the history of the uranium sector in the last decade. Look, in the last decade, as I mentioned, the sector was sleepy and slow and nothing was going on. Last year, there was an opportunity to acquire a company called Uranium One. And we bought that from the Russian government. And it's quite an interesting situation because your audience may be familiar with the words or with the name Uranium One. It's been in the news quite a bit over the last decade. It's a company that owns some of the largest uranium deposits on U.S. soil, but it was owned by the Russian government. And there was always a lot of controversy and talk about how a foreign government was allowed to own such strategic assets on U.S. soil. Last year, finally, there was an opportunity to acquire these assets, and we were the successful bidder. We were very aggressive and determined to repatriate these assets and buy them back and bring them into the hands of a U.S. company, which Uranium Energy Corp is. And really, by doing so, we've restored a great degree of domestic production capability that's not controlled by a foreign government on U.S. soil, but again, by a U.S. entity here. That acquisition marks, it was a $120 million cash acquisition that we closed on December 31st. And the timing in hindsight was quite interesting because obviously it was before the invasion of Ukraine.
Yes.
Now, when you look at where we are and everything you and I have just talked about, it's a very important position to be in to control the largest uranium resources on U.S. soil that are permitted, ready for production. And that's why we are advancing and developing these projects forward, looking for the right uranium price to really restart and also to see where things ultimately land with the talk of sanctions, with the talk of retaliatory sanctions.
Yeah.
There's so many moving parts in this market right now.
Just hypothetically, Amir, if Russian imports of uranium stopped today, what would happen to the U.S. energy market?
I believe the energy market in terms of availability of electricity and energy will be just fine because most U.S. utilities carry 2 to 3 years of forward demand in terms of inventory on hand, number one. And number two, there will be a price incentive. There will be a move higher in the uranium price.
Yes.
And uranium mines or projects will be developed and supply will be available. So I don't believe this is a case where if Russian supplies are cut, the lights go out. That is not the case.
Okay.
There will be a rise in the price of the underlying commodity. But if that price still makes up a small percentage of total operating costs for a plant, I don't think we're going to get hurt over here. And I don't think the lights will go out. And I believe ultimately that's the right direction to be on to eliminate the Russian dependency.
It was probably only 5% of the total operating cost because the price was low, right? But we're going to talk about the price now.
Yeah, go ahead. Let's talk about it.
Yeah. So, okay. Very volatile market I've been seeing. got about $30 a pound in September, all the way up
Yeah.
to 45, and then 65 not too long ago. Now we're back down to 48.
Yeah.
Can you sum up the price volatility we've been seeing in the last couple of months here?
Yeah, I mean, exactly what you just said. We had, in early 2021, the price was under $30 a pound.
Yeah.
As the issues that we were talking about earlier about supply demand started to really come to life, and when we're seeing this unprecedented demand growth, again, driven by megatrends of electrification and decarbonization, nuclear power found a bid early in 2021 that started to take the price from under $30 a pound to about $40 a pound. Then the introduction of the Sprott Physical Uranium Trust, which is one of the first actively sort of managed and driven funds of its type in the uranium world, really was a game changer in terms of injecting more liquidity and price discovery in the immediate spot market. That happened in August of 2021. That became another catalyst that towards late last year drove the price all the way to $55 per pound. We came back, settled, and we entered this year at $42. From $42, the invasion of Ukraine by Russia and other geopolitical events that we've talked about have taken the price as high as $64 per pound. Again, has pulled back with the recent market pullback in all asset classes that we've seen in the last week. And now we're sitting at about $48 per pound. So still a gain of just under 20% year to date.
Yes.
However, obviously also 20% lower than the highs that we've seen this year.
Do you think that the spike in price, which coincided with the invasion of Ukraine, had anything to do with fears of a nuclear war and perhaps the rearmament of great powers?
I really don't believe so.
Okay.
I don't believe in that, and I know that's a fair question. We've seen it come out there as this war has developed and evolved. I really don't think so.
Okay. You had a panel earlier at the RIC about cornering the market. Very broad topic. Tell us about what you presented.
We've been very aggressive in developing and building our companies with the two yellow metals, gold and uranium.
Yes.
In the case of Uranium Energy Corp, in the last year, not only did we do the largest M&A transaction in the whole sector over the last decade by acquiring Uranium One, we also entered the physical market and contracted to purchase 5 million pounds of physical uranium with an average cost of $38 per pound, which is, all of our purchases are in the money right now with uranium at $48 per pound.
Yes.
And so we literally not only go after mining assets, but we also went after physical uranium and aggressively acquired that. In the gold sector, as you know, with my other company, GoldMining, we've been one of the most aggressive acquirers of resource stage gold projects over the last decade, accumulating over 32 million ounces of gold equivalent resources across all resource categories of measured, indicated, and inferred. So these are big numbers, and these are very large resources and mining assets and physical commodities like uranium that we've been acquiring. At this conference yesterday, I heard from Jay Martin, the moderator, that the most talked about commodities so far have been gold and uranium. Okay. And so it was quite timely to be talking about the two yellow metals and cornering the market for the two yellow metals.
Well, let's focus on uranium. Gold's a little bit harder to corner because it's so big, but uranium, do you feel like the market is just so dependent on a few key players right now on the mining front?
There's a scarcity of players in the uranium sector. There's a very limited number of ways you can play the uranium sector. The total market cap of all the listed companies in the uranium sector is still less than $20 billion, so it's very small. And there are, like to your point, like unlike the gold sector where you have hundreds of ways to play the sector, ETFs, juniors, mid-tiers, majors, etc. In uranium, there's probably a handful of companies with legitimate capability to produce uranium with permitted assets, with a proven track record of production. That's tiny. And the relevance of the uranium sector, and its appeal to the world is really very universal, because it has to do with the one thing that we need all the time: electricity and energy. And it is, again, the fastest growing segment of the energy market is the demand on emission-free electricity. That is the one thing nuclear power that uranium is the fuel of provides. So it's unbelievable to me that as an asset class, the utility that it provides is so wide and so relevant to all facets of life,
Yeah.
yet there are so limited ways that someone can talk about the sector and the players, or even from an investing point of view, about the sector.
I want to talk about EVs now, and then we'll close on
Sure.
the price. You know, it's interesting because Biden recently announced a $2 billion government investment in the lithium industry to boost lithium production domestically, not rely on Chinese exports. Now, he has a plan to make, I think, 50% of the American fleet of cars electric by 2030. By 2050, he wants zero emissions. And so some people think that's an unrealistic target. I'm going to get your take on that target. Sure. It's interesting that I personally haven't read an announcement from the Biden administration about investing in the nuclear sector to boost production of nuclear energy to meet the demand of growing electricity, to meet that 2030 target of electric vehicles. Are you seeing any such investments from the government?
The infrastructure bill did have a provision in it of $6 billion as tax credits to be given to U.S.-based nuclear power plants.
Was that in response to his EV goals?
It's in support of the stated net zero objectives that the government has announced. Absolutely, and also where there's bipartisan support is for a $1.5 billion program to establish a national uranium reserve, which started during the Trump presidency, has been continued during the Biden administration and presidency. And so between $6 billion for nuclear power plants, proposed $1.5 billion over 10 years for establishing a uranium reserve. And the uranium reserve, the concept is to purchase uranium from newly mined sources on U.S. soil. Mm-hmm. This could not be any more direct in stating that, yes, there is an objective here to support all industries that have to play a role to meet the government's target of net zero by 2030 or 2035. There's different targets out there, but to achieve net zero. And this is why this is not a China-India story. You know, in 2006, 2007, when we had a uranium bull market, that bull market, there was hardly talk of EV, and electric vehicles. Tesla, as a barometer of how far EV has come, was a one-year-old company in 2006. And there was no government mandate around net zero pledges anywhere in the world. So the nuclear power story was an emerging market story around just China and India's growth. Today, the nuclear power story and the growth in it is already embedded and benefiting from the growth in China and India in terms of number of reactors that they're building there. China's talking about 150 reactors over the next decade.
Yes.
But it's more than that now, because it's about these global pledges from the UK to the United States to Japan to the EU towards carbon neutrality.
Yeah.
And it's the carbon neutrality pledges that came out of the Glasgow, the COP26 meetings in late 2021.
Yes.
That is now putting nuclear power front and center as a key solution for achieving carbon neutrality. And that's really been a game changer, in my opinion. In no other previous bull markets that we've seen for uranium has there been such a backdrop.
How likely is this 2030, 2035 target and 2050 carbon neutrality target? Suppose the government does buy more uranium for its reserves.
Right.
That's one issue. The other issue is there even enough supply to meet this growing demand?
In terms of supply of uranium, I believe it will be there, and I believe, again, we've seen, and we're we got a front seat view vantage point on this. The mineral endowments are there, and the capabilities are there. There's no doubt about it. Look, the optimist in me says that hopefully we will meet these pledges around the dates that have been set, because it is extremely important for. Really, why are we doing all of this? We're doing all of this to reduce temperatures, to really get ahead of the issues around global warming, and to really try to change the pace of some of the unprecedented environmental issues that we've seen over the last number of years that keep getting worse year in and year out.
Yes.
So absolutely, the optimist in me believes and hopes that these pledges are fulfilled.
Last point, let's talk about the price outlook. You mentioned that suppose Russia imposes some sort of retaliatory sanction and reduces the supply, we're going to see prices go up.
Yeah.
Well, the price already went up to $65 a pound, didn't stay there. Amir, what do miners in North America need in terms of the price to resume operations?
Look, there's no ifs and buts about it. Uranium got to $65 per pound. and I didn't see a single announcement about a brand new mine in the uranium sector anywhere in the world being commissioned. So clearly we have our answer. 60 or 65 is not the incentive level to build new uranium mines. 2 years ago, 3 years ago, you would have heard companies talk about $50 a pound as being potentially a level to incentivize development. But that was before we ended up in a war today that's ravaged with double-digit inflation and supply chain bottlenecks and a tight labor market. So the incentive prices discussed from 2 to 3 years ago are not in line with the reality.
Is this because of broader inflation, the operating costs of the
I think everything.
plants?
Look at the last 2 weeks. We've seen capex blowups everywhere in the mining sector, from Alcoa down. And we're seeing pressures in terms of rising costs, and we're seeing, again, tightness when it comes to availability of materials. Uranium industry is not shielded from that. And again, when we saw $64 uranium, that did not stimulate the development or commissioning of any new uranium mine. So where is the price? We've heard our very good friend Rick Rule discuss this yesterday, that according to some of the reports and studies he's looked at, it's $75 perhaps as an incentive level to see mine development. My own view is that I think Rick is too low. I think when we look at the uranium price in 2010, it was $70 per pound. Adjusted for inflation, we're at $100 a pound today. And $70 from 2010 was a price that was incentivizing development. My own feeling is that we need to see a uranium price well north of $100 a pound to truly bring
sustained $100.
It has to be sustained, because you need to see human capital get replenished. You need to see people not only, this isn't just a cost of capital exercise to incentivize mine development. We've lost a generation of individuals that should have been working in this industry to be available to respond to building a new uranium mine. And that doesn't exist. So I think the price is still well below any levels to incentivize new development.
I just remember when you were on the show a few years ago, back then the price was relatively flat at a range at the time much lower than today's price. This level of volatility, 30 to 65, then back down to 48. Have you seen this before in your career?
It's a lot more than what we're used to in uranium for the last, I've been in this uranium business since 2005. We saw some volatility in 06, 07. We saw some volatility
in such a short period of time.
But in such a short period of time, no, we haven't. But again, it's the introduction of physical ETF activity. It's the introduction of unprecedented geopolitical events. A market that used to just flatline like this, uranium market, for a decade at $20 or $25 per pound, which was a difficult time for the industry, has now started to do this, which is not helpful, because volatility doesn't allow an industry like ours that has to allocate capital for long-term development to make decisions like this. So long-term, I think we need to see the price stabilize. The geopolitical events need to settle one way or other. We'll see what the true long-term price is. And look, this is the most exciting commodity you're going to find out there right now. The outlook for uranium and the setup that we talked about has everything going for it in terms of the geopolitical events, the fundamental supply-demand nuts and bolts, and this long-term future that's linked to carbon neutrality and net zero.
Amir, excellent thoughts. We'll see what happens with the price. We'll see if the hedge funds deal with it some more. But in the meantime, good luck with your projects. Thank you for coming on Kitco.
Thank you.
And thank you for watching Kitco News. I'm David Lin. We'll have more for you at Rick.
Kitco News, special coverage of the Vancouver Resource Investment Conference, is brought to you by First Mining Gold.